Backtesting is one of the primary workflows for quantitative researchers. Quotient's backtester supports a range of powerful use cases and analysis features to help researchers evaluate the efficacy of their proprietary alpha factors and models. Quotient automates data management, time series operations, and production so that the investment firms can focus on idea generation and building proprietary alpha models to identify unique market insights and investment opportunities. With Quotient's Backtester module, users can review historical data, assess factors, select universes, assess performance, and explore visualization. In a backtest, we seek to evaluate the predictive performance of a simulated trading strategy composed from the historical information of your alpha model. Quotient's Backtester provides powerful features including variable rebalancing frequencies, alpha signal delays, signal staggering, and seasonal studies or date ranges. You can customize your backtest for a simple backtest with a single factor, a multi-factor backtest and cross-correlation analysis, and backtesting using a screen alone without an alpha factor. Customization options include delays and rebalancing frequencies, date ranges, environmental and seasonality effects, backtesting using alpha classifications, for example, string data, buy, hold, and sell, performance metrics, custom start and end dates, quantile spreads, benchmarks, and relative return analysis. Let's get started creating a backtest. With the Backtester module, the underlying data is licensed from your data provider and the data has been made available to Quotient. All of your data remains in your protected data environment. In Quotient, you can create a new backtest by selecting the Backtester module from the list of supported analytical modules available from the plus icon menu on the application ribbon. This action will take you to a backtest setup page where you can intuitively design your backtest study as desired. First, we will assign the universe for the backtest by dragging in the desired screening data into the universe box. The selected universe will serve to define the context for the backtest study. Note that this universe can be historical and time varying, whereby the candidate securities may be different for each date in the study. In our example, we will utilize a pre-built screening field that identifies the largest 1,000 United States equity securities at each month end. Next, we will assign the alpha signals that we wish to backtest. In Quotient, we can locate a desired alpha field from the data navigation panel and then simply drag this alpha item into the backtester's alpha address box. For this backtest, I'll choose price momentum. The backtest setup page will then prompt us to specify an alpha stratification method. In this case, we will choose to evaluate quintile portfolios, whereby Quotient will build 5 distinct portfolios at each date according to different tiers of alpha values. We can also apply a weighting scheme to this backtest. Here, we will use the market cap data as the weighting technique. As a result, the holdings for each stratified quintile portfolio will reflect cap-weighted positions. Quotient also supports the ability to specify one or more rebalancing frequencies that control how often each portfolio is repositioned according to the evolution of the historical alpha information and associated stratification cycles. For this backtest, we will leave this option to the default setting, which will apply portfolio rebalancing at every time period. We can choose a comparison reference benchmark for our backtest by dragging in a source of historical constituent weights as the desired reference index. In this case, we will be using TR indices weighting data. We'll give this the portfolio name momentum and the benchmark name US Core within the backtest setup steps. For our backtest, we'll look at a date range of trailing 20 years. The performance section of the backtest setup page presents a range of summary performance metric options. For this backtest, we will choose the annualized return, annualized volatility, information ratio, and maximum drawdown metrics. The save operation will then create a new backtest library and the location from where the creation action was initiated. Drilling down inside this new backtest folder reveals a list of fields. Some of these fields reflect input data, while other fields reflect output or derived data. For input fields, the data will be procured from the associated source libraries according to the request context as specified by the prevailing universe. Output fields are implicitly generated through the underlying calculations according to their functional definitions. These are also known as builder methods. Here, we inspect the net asset value per share output field, which presents the growth of a dollar time profile for each quintile portfolio. Underlying backtesting details such as transformed alpha signals, holdings, factor portfolio weights, and security returns are available for inspection. Summary performance metrics for each quintile portfolio can be accessed using the Return Summary field. Note that in this backtest, we can explore performance in terms of either absolute or benchmark relative returns. The chart shown here presents the relative annualized return performance for each of the 5-factor quintile portfolios. Typically, an attractive alpha factor will exhibit a monotonically increasing performance profile across the progression of stratified alpha portfolios. Stay tuned for a future backtest demo where we will show the use of categorical, non-numeric alpha classification data to test the efficacy of buy, hold, sell recommendations from the sell-side analyst community, as well as a multi-factor backtest study.